Hello, it is Tuesday, April 6th, and this is the Retirement Income Options Show. And we are going to talk about a couple of new opportunities as well as review the market a bit. So I put out the report just a few minutes ago. This will go up on fundamental trends as soon as we're done with the call. We have our stock file and our ETF file. And the general tenor of the market was that we got to that shiny round object that in January I said that we would get to. 4,000 on the S&P 500. However, risk management is still super important as the central banks slowly try to get rid of a little bit of the stock market liquidity and focus things to the fiscal side. I would suspect that the 2015-16 scenario of choppy markets with mini corrections along the way, sector to sector, rolling, is probably the most likely scenario. I still think 5,000 on the S&P 500 in a few years is very likely. However, between now and then, we could certainly see 3,000 again. I would think that somewhere near there is where we hit. Something will happen. It'll be bad. It'll be brief. It'll be gone. And when it happens, we want to be buyers more aggressively than we have been. However, the put selling has been outstanding. Right, you can sell puts a month or two out. They almost always expire. You collect your 3, 4, 5, 6% in cash, annualized returns over 20%. And the worst case scenario is you buy something that you like below today's price. Pretty good way to chase. So focus cash secured put trades this week. For those of you who haven't done ViacomCBS and Discovery, I think this is probably your last week to do it at these prices as the big banks fix their books, their trade books. Credit Suisse dumped some more. I believe it was Nomura had to dump a little bit more. But pretty much the big selling pressure in Viacom and Discovery is gone now. However, it'll take some time for sentiment to turn back up. So that's a good time to sell cash secured puts. On our list are the May 21st puts. However, if you want a little bit more premium, go ahead and sell the Junes and get more premium. We'll, in a minute, talk about volatility and where I think things are going in the short term. On track remains oversold on the weekly, so every time it's on a down day is probably a good day to sell puts. It's been in the process of finding a bottom. Looks like it may have had its absolute bottom. So if you can get that stock in the 20s on a net cost somewhere, probably doing very well. I added Quidel to the plug and play this week. That'll be going up later today. Talked about it yesterday in Stocks of the Week. Quidel is a big lab diagnostics company. I have a lot of experience with that. If you'll remember, I was a big investor in Exact Sciences back when it was a couple bucks a share, all the way up to the 70s. That stock has still doubled from the 70s, but that's been the hard money. To me, the easy money was from 5 to 70. From 70 to 40 has been tough. People say, "Oh, but you didn't double your money again." But I made 2 10-baggers on that one. So when you make $1 million on a stock, you start sitting back and say to yourself, well, maybe I don't have to make the next couple bucks. I can spread that money around and get a little bit more diversified. I think Quidel spiked up on the coronavirus, and now it's coming back to earth. I encourage you to take a look at their website. And I think this correction here, right, that run up on testing, crash, up, down, and now it's in the buy zone that I think I identified last July or August is when I started pointing to these ranges, probably right after this. Last August, I started talking about this being the range. And now we're in it. And could it go down to around $100 a share? Absolutely, it could. However, I think with mergers and acquisitions, that this company has been rumored to be talking to a couple of other companies. If this company merges with whoever, you could see this rally way back up here and break out to new highs. Why? Because testing for coronavirus is going to be around forever. As far as you're concerned, forever. Why? Because it's mutating enough that we're going to have to get a different shot every year, which means that they have to keep testing people so they have the data. We'll probably get another swine flu. We'll probably get another pandemic here in the next 20 years. These companies, during the ebbs, are when you want to buy them because the market, the traders lose interest short term. This is a good one to sell cash secured puts on right now. So I'm looking at the June 110s for over $5. That would be over a 20% annualized return. And if it did get down to 110, you got in there with a net cost of 104 or 105. That's pretty low. That's really close to what I think its absolute bottom would be, around 100. Not a bad stock to own. Teladoc, oops, I didn't hold that one. Teladoc also looks like it's about ready. So when we take a look at the screener here, they've been oversold. The stock price seems to be jitterbugging around this area, so the top of our buy zone. That doesn't mean that it can't turn over and have another leg down. It certainly can. However, I think you can start scaling into this one because this technology is the future. This is what doctors are going to be using. I was amazed when I went to the doctor last week that he punched everything in. I mean, 4 years ago, he didn't use the computer for anything. Punched everything in. He ordered my Cologuard exam, CT exams, everything that, this is my use up the deductible year. So every other year I use up my deductible. And we talked about this technology and what they're doing. You're going to have tremendous amounts of follow-up done online, just tremendous amounts. So, and this guy's a pretty respected guy. He's actually the trainer for one of the local college Division I teams. So when you see Teladoc here, had that run up to this area, tries to break out, keeps coming back to this area, we could get pessimism down into here, but boy, I have a real hard time seeing this under about 140. And I know that in a big bear market, it could go way down here, but I don't see it. I think that this stock, if we chart it out tentatively with this as a bottom, I don't know if that's right. You see how high the target is, way up here around 600. It's currently trading at 182, so that could be a triple. Now, if it goes down to here, then your target comes down a little bit. But even if it comes down to here, your 1.618 target, which is your traditional target, is still up around 500. So depending on where this bottoms, I think your target over the next several years is between 500 and 600. And again, the revenues that they dropped to the bottom line, at this point, they're built out. It's all gravy. So I think you ought to be looking at Teladoc on this pullback. This really seems to be pretty big support. Again, that doesn't mean that it will hold. Just means that if it does go below, it'll probably get back up to it pretty quick. Still not a lot in covered call trades. I'd rather have you just trim some of your inflated stocks. If you have any stocks that you've made 50, 60, or 100% on, put them up here and we'll talk about what they look like for covered calls. The post-SPAC deals, MP Materials, we want to trade that one. So we pull up that chart. We see that it is all over the place. Let's go to a chart, 6 months. There we go. Take a look. Broke out of this wedge here, which is what we expected, and now it's coming back down. This area right here, right around low 30s, seems to be pretty good support. As more news comes in on China, as we start to use more of our own rare earth materials, as the government funds more of this, right? The infrastructure plan. People ask me what to invest in for infrastructure. Well, here you go. This is an infrastructure company. You're going to want to take a look at this. Can it dip down into here? I think it could get to the lower 20s on some sort of extreme trader movement, which is why I like selling the puts and seeing what we can get on them. So right now, put that we have targeted is the May 21st 30 for anything over 4. I'm not sure where that is right now. Not quite there yet. And you could also go out to June if you really wanted to. Maybe even do a 25 if you wanted to be more cautious. Ask for $2 or $3. I think that for the more conservative investor, I think that's probably the way to go. Just take a look at the June. So I could probably update this and talk about that. I think this is your worst case scenario down here. But I also think you're looking at this stock up towards 75 at some point. I really think this is going to be one that cracks 100. I think it'll hit the 2 levels, and it might even hit 3 levels, and it might even hit some of those 4 levels that we've seen with some of the other companies. So somewhere between 75 and 160. I mean, I really think this has a lot of upside, especially since at some point their margins are going to expand. Right now they're in the build out phase. Once that's over with, Katie bar the door. This is a $100 stock. And like I said, it could go higher. But then again, as margins expand and they start to contract again, you run into some physical limits because it is a commodity company, and you just have to make sure you sell that rip. You know, when you get that huge rip, you're going to need to sell almost all of it. Go through the list here from last week. Some of these have hit, some of them haven't. SunPower is a favorite. I think that if you're not selling puts on this, you are missing the boat. Look at that channel that it's in. It's hit the top of the preferred buy zone a few times now. That's probably about as good as it gets. Good grief. So there you go on SunPower. You would take this out of the equation if you want to. Start playing with it over here. Okay, if that was the peak, start anticipating the bottom. I told you this was a $100 stock some point on fundamentals. Look where that target is, 1.618. If it has bottomed, you're looking at a $112 target. That's a quadruple. So sell your puts on SunPower. Make sure you have a starter position as well. Somebody's asking about company not on our list or call Magnite. What do these guys do? Oh, good grief. Have you sold any covered calls on this yet? Probably should. Probably be trimming this stock too. I don't know what they do, but I mean, there you go. Literally could get down into the upper 20s. So I'd be selling covered calls. Probably take a trend line like that. So somewhere in there, $50 covered calls, probably. Again, you don't have to sell it against the entire position, but if this is a triple for you, you know, maybe sell it against 2/3 of the position. Any chart like this, though, is silly, right? Did its fortunes really change that fast? Probably not. Is it way ahead of itself on all the fundamentals? Probably so. When you see charts like this, you shouldn't be jumping up and down and clapping for joy. You should be saying to yourself, all right, how am I a cold-blooded killer here? Well, how do I put some money in my pocket? Not, oh, yay, chase, chase, chase. No, this is, if you bought it in here and you're up here, you know, start thinking like Tony Soprano, get an envelope in your pocket. All right, anything else? No? Quickie today? Let's take a look at the VIX. Somebody brought it up, and I already had looked at this one. So if we take a look at the ETFs, the VIX, right, is starting to get oversold. And you've had it just keep coming down, which is natural. You know, it does come down in general. Let's shorten this up to a 3-month chart, right? When you compare it to the actual VIX index, see that it's down at 17-ish. It's been normal for it to be in the upper teens for a number of years. And we haven't seen it down in that 10 to 12 range for 3 years now. A little over 3 years ago, we made that gigantic trade where we were buying calls on VXX like 2 weeks before it spiked. People made, you know, 400, 500, 600% on that trade. I don't think that this is quite there yet. I think that you need to see VIX come down to around 12. I have a hard time believing it will get to 10, but maybe. But there's still quite a bit of selling of VIX to go, and there's a lot of people doing it. So what we want to keep an eye on is when it starts having a hard time falling. So when this is no longer trending down and it starts to go sideways, that's probably when we make a swing trade. Just keep an eye on it for now. You need to get to the point where it jitterbugs sideways for a while. The other thing to take a look at is TLT. It is in what I would consider a buy zone. I don't think I love it. I think it's just a little bit lower, right? It's down to around 130. You have to start saying to yourself, below 130, what do I do about this? So the 10-year treasury is at about 1.7 today. And anything north of 2, you start to wonder if it's going to cause trouble. Nouriel Rubini said today that if it does get above 2, you're going to see all sorts of things go haywire. I'm not so sure that 2 is the magic number. I don't know if it's 2.2 or 2.5 or 3, but anything above 2, you have to wonder how much sense does that make, given that any economist worth their salt knows that deflation is the big boogeyman, not inflation. It's just the way that it is. The natural demographics dictate that deflation is the big boogeyman, and then it's complicated by technology. So if we print money, spend, you can create some inflationary pressure, right? Counter-cyclical policy. But you can't overcome the natural direction of price, which is down. Because as the population gets older, there's less spending. And as technology is disinflationary, prices hold the line because companies can maintain or even increase their margins without raising prices. And weirdly, gold does pretty good in both situations. So eventually there will be a break. When is that break? I don't know. Clearly the Democrats are going to spend a lot of money. I have no beef with that. They should be, because deflation is the boogeyman. All these people talking about inflation, it is mind-numbing propaganda. Or just people who think that Austrian economics apply to the United States, which they don't. The biggest, most powerful economy anywhere in the universe, on Mars, in Timbuktu quadrant, wherever, most powerful and biggest economy, especially on per capita basis, always will have different rules than the rest of the economies. On Earth, that's the United States. We set the pace. China, by virtue of having a ton of people and a big wealth gap to close, even after closing a lot of it, is also a driver. So if you took a look at the GDP estimates today or yesterday, what you're going to see is that the United States economy at about 6 to 7% this year growth is actually going to grow faster than the world economy, which includes all the emerging markets. We're going to pull the world along. And as supply chains move back to the United States, because there's not a big advantage to being in China anymore for most things, you start to go, how's this going to work? And what's going to happen is that after this catch-up growth phase, slow growth forever comes back. And at that point, there's a dislocation. And weirdly, the market may anticipate that years in advance. You have to remember to ignore the narratives of traders. Traders who try to tell you the fundamental story, you should use your farmer's words with. Call bullshit on them. Because I bet it's not the same narrative that they had a month or 2 months ago when their trade was different. So if you're looking for safety, and you're looking for being on the big trends, ignore these traders who have 1 week, 1 month, and 1 quarter outlooks. If you want to trade, go ahead, but just understand that around 80% of traders only win if the market's going up. And in a choppy environment, a lot of traders are going to get chopped up. Selling cash secured puts on the dips like we're doing, using a relatively simple screening process, looking for oversold weekly charts, one of the easiest things you can do, gives you a margin of safety, pays you an income, and the downside is you own great stocks cheaper. So if this gets down here to this orange line, we really have to start thinking to ourselves, what does that mean? The answer probably is that we're giving too much credit to the growth outlook. I'm not even sure how effective these charts are with bonds. And clearly this is what I did before. Okay. In fact, I would put this here. Then you can put your wider box there. This area here, see that red line? I don't put that in. That's a system measurement using volume weighted data. So somewhere in the 120s, you probably are looking at a reversal, rates falling again. And we should keep a close eye on that. Because if this gets down into here and the 10-year treasury is over 2%, and we know that the growth is just a catch-up trade from massive stimulus, and you can't do massive stimulus forever, because then you do deteriorate the value of your currency. And what did we talk about with Meb Faber? The biggest, most important thing in the universe for Americans is that the dollar remains the reserve currency, and it's going to, unless we really screw up. And we're not anywhere near as screwed up as most other places, right? It's like being drunk at a party, but not as drunk as everybody else. You're sober enough to call the Uber. All right, let's call it a day. And I would really take a look at, if you haven't done it yet, Viacom and Discovery, on track, Fidel, and Teladoc is getting close. Have a great afternoon.